Hey folks, welcome to Verified Investing's Trade Setups and Action video. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get into some action here on this Tuesday, May 25th, 2021. I want to talk about a bear flag forming on the IYT, which is the transport ETF. This again tells me there is significant downside coming in the transports, and ultimately it's going to bleed through into the market, and you're going to see a big drop in the markets in the not too distant future. So we'll talk about that in a second, but let's go over this chart on the IYT. So you can see about 2 to 3 weeks ago, you put in this topping tail. That was your first indication of a top on the transports, all right? Basically, topping tails are bearish signals. They form because institutional investors are selling as small investors are buying. So think about here, the market initially on the IYT pushed up, it then reversed. Pushing up is the small investor, institution sold into it, it creates that top signal. Essentially, it's a run out of buyers as institutional volume accelerates there. You can also see down here, you had a good surge in volume right around that period as well. You then fell, bounced, and then fell. And then look at this bear flag right here. And again, you could draw some trend lines through the lows here, but it's a very tight, beautiful bearish pattern, bear flag. That is going to set up for a fall. I talked about this earlier to members. It's already down about $1 on the IYT from that level. But you're going to see a pretty significant drop here over the next 3 months, in my opinion, on the IYT. You should see a move down here. This is going to be your big support level around $235. So you're talking about a $35, $36 drop here, well over 10% on the IYT. Look for that. All right, let's talk about the Qqq Nasdaq 100 here. Nasdaq 100 potentially starting to put in a head and shoulder pattern here. We all know the infamous head and shoulder pattern that triggered and basically dropped Bitcoin to the exact target of 30,000. But you can see very, very clearly here, you have a shoulder, head, shoulder. Now, you haven't rolled over on it yet, but you do want to keep an eye on this. This would be a very, very intriguing breakpoint right here. So if the tech sector starts to sell off and takes this out, you can do a measured move from this high down here, and basically that brings you to an approximate target of this area down here, somewhere in this vicinity, right around 285 to 290. There's also a gap fill below 280 on the Qs. So again, to be clear, the head and shoulders is in the process of forming. It has not triggered yet. If we go to the Bitcoin head and shoulders here, you can see that here was your shoulder, head, shoulder. It triggered when it broke this line right here, and that's when you got that flush down to 30,000 right there. So that's what the same thing you're looking for on the chart of the QQQ. All right, there's lots of head and shoulders out there. If we take a look at Apple, take a look at this, you could potentially make a case for shoulder, head, and same type of shoulder. On Apple, there's a very interesting trend line here. Take a look at this, and this basically aligns with the neckline of the head and shoulders as well. But look at this, pivot, pivot, and then you kissed it again here, here, and then here and here. This is your line in the sand. I mean, if you want to play the technical game and be really direct, you would say, okay, Apple is okay for now, meaning it's not a definitive no-brainer short until it breaks this trend line. But once it breaks this trend line, you are going to see a market that's very similar, a drop in Apple that's very similar to the drop in Bitcoin. In fact, I think Apple could dump straight from that point all the way down to about $95 a share. I mean, think about that, folks. The breakpoint's right around 121, 122 right here. If it gets below that, again, a drop of over $20 in Apple is potentially on the table. And if that happens, you can guarantee that the Nasdaq 100 and the S&P are dropping at a minimum 10 to 15%. If we go to the spiders here, I want to show you this here, folks. Again, you're just underneath this high pivot here. You're pulling back a little bit on the spiders today. This is your big trend line to watch on the spiders. So it seems to me, to summarize, that there are so many major trend lines that the market and individual stocks are just above. And that, again, as long as the market's able to hold above these lines, the market is safe. If you break these lines, like on the spiders, this line extends all the way back to March 2020. If you break this to the downside, I mean, look at how many times you've hit this line. Kissed it here, hit it here, 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 and here. You know, when you break this, you are going to see a significant drop. I can throw in my moving averages. I think you're at least going down to the 200 moving average, which is at 372 and change right now. And that would be an over 50, basically a 50-point drop, right around $50 on the spiders. So you're talking, 10 to 15%, right in that wheelhouse. Okay, so again, just to go over a couple other charts out there that are looking bearish as well. We looked at Apple. Let's take a look at Amazon. Amazon's a great example here. Amazon had this one push up where it went to double top. It failed to break out. It then fell sharply, and look at the bear flag you're putting in. If you want to talk about a trend line potentially on this, you could probably do one here, and I'm just kind of looking at this as we go. But it looks like a pretty accurate trend line right here, all right? In fact, let me take away some of these other trend lines so that it doesn't confuse you guys and we can keep it as simple as possible. All right, so basically pivot low, and then you consolidated right here. You went down, you touched it again, pulled back, broke above it, consolidated on top of it, broke up, hit it here, and hit it here. And what that tells you is this is your line in the sand. If this bear flag plays out and breaks this line, Amazon likely will fall down here to about the 2,500 marker on AMZN. So there's some interesting things. Now, how am I playing this market right now? So I am short the indices. I picked up some QID in the last day or so, starting to put on the short side on the indices. I do have shorts on various stocks as well. I shorted real estate today. I think real estate is ridiculous at this point. I did so by buying DRV. I think that's good for at least a 10 to 20% gain in the near term over the next 1 to 3 months. And there are some stocks that I'm looking on the long side. So I do think stocks that are already beaten up, that are not U.S. based, are going to be the play here. So what do I mean by that? Like TME. TME to me, it's up a little bit today on the day, but this stock has already collapsed down. This is Tencent Music. It's a Chinese stock. The Shanghai stocks continue to look very, very inexpensive to me, if you will, and I will be continuing to look for those to outperform the S&P and the Nasdaq stocks. My thesis on the Chinese stocks is that ultimately money is going to start heading overseas because the U.S. markets, once the reopening is over, there's going to be this air pocket that once this massive reopening is over with, investors are going to say, okay, well, monetary fiscal policy is going to start to dry up. That's not good for stocks. In addition, the reopening pop is going to subside. We're going to get back to more normalized 2-3% growth rate over time. And ultimately, they're going to say, okay, if the Fed is tightening, whether they're reducing their bond buying or actually tightening rates, they're going to look for other places to invest. And that's where the Chinese stock market honestly looks very, very good to me. Doesn't mean it can't have a correction, obviously, but I think over the next 3, 6, 9 months, you'll see that market outperform the U.S. markets pretty sizably. All right, guys, come to inthemoneystocks.com. Again, look for my name. Under my name, there's a drop down for my services, verified investing and verified options, or follow me on Twitter at Gareth Soloway. Come find me. Let's make some money. Take care.